Well, as many of our viewers are no doubt familiar, the golfing boom has continued into 2021. Brian Sozzi, Dick's Sporting Goods, out with its quarterly results yesterday morning, and on the call, I mean, man, if you are in the golf business, things are looking good right now.
Right on, Miles, my fellow golfer. And I want to set this up quickly by pulling up a photo here of me. That's me at my local golf range last week, and you'll see my golf bag right there on the right. Worth noting here, nothing in that bag came from Golf Galaxy, which is owned by Dick's Sporting Goods. Oh, wait, actually one club in there. So out of 16 clubs in that bag that I was trying out, only one club came from Golf Galaxy. I got everything else at a competing retailer. And that sets the stage for this, because I imagine a lot of other folks have been disappointed with the Golf Galaxy experience over the past 2 years of this golf boom. Dick's coming out yesterday saying they're going to invest $20 million in their Golf Galaxy section of their stores. And what that will entail is bringing TrackMan technology. Miles, you and I know this stuff quite well. You can walk into a Dick's Sporting Goods hopefully soon and hit your ball into like a giant digital screen. You'll see how far you can hit it. You can see how much you're shanking it or hooking it or even dropping in the water. That is good. That stuff, that technology is now the standard bearer in the golf retail industry. So it was good to see Dick's Sporting Goods getting in line with this and rolling it out their stores. They're also now rolling out, you can book online lessons and fittings online, which is good because a lot of other retailers are in fact doing this. So it's good to see Dick's Sporting Goods playing catch up. They will also be investing more in PGA Pros, which is always a good thing to be having in the store when you're selling golf equipment. Now, who does this benefit? And I got a good note from Randall Connick over at Jefferies. He calls out Callaway Golf. Keep in mind, this is the company that just spent $2.6 billion to buy Topgolf, really a tremendous asset there, I think. But Jefferies Connick is noting that Callaway should benefit. He surveyed 150 golf retailers, and those retailers told him that new consumers, new people into the brand, millennials are coming into these retailers asking for Callaway equipment. You know, he noted drivers. Callaway drivers are very top of mind right now in consumers. And also Callaway irons are also winning over the likes of TaylorMade and competing retailers. Also golf balls there as well. So if you're looking for how to trade this potential recommitment to the golf business by Dick's Sporting Goods, it looks to be a Callaway Golf, Miles.
I mean, look, Callaway Golf right now is close to eclipsing. I think it's kind of right at its record high. And the record high for the stock was set back in the late 90s. So this is Jared Blicker can tell you how nice that is on a 25-year base. But look, there's a lot of things happening in the golf business right now. And I think I went back and I almost wrote about this a couple weeks ago when we had Acushnet, which owns Titleist and FootJoy, and also Callaway report their earnings. I think it was the first week of May, and they both talked about basically the people who were buying stuff were existing golfers. And I know that the narrative is always around bringing people into the game, and the Topgolf acquisition by Callaway is a big part of that. But Sozzi, you know, the people who are going to spend $2,000, $3,000 every year on golf stuff are the people who are getting out 10 times, 15 times, 30 times a year. And I think what's interesting about where Golf Galaxy sits within the space is that a lot of people have a club that has a pro shop that might have some kind of a TrackMan or maybe a GC Quad or something to get fit on, some kind of tracking device. And Golf Galaxy needs to try to compete with that customer. And I think that where the golf business is likely headed, and you see Titleist has a couple of spec iron type, couple of prototype type things where it's like $500 per club, let alone a couple grand for the entire run of irons. And I think the golf business right now, for the equipment side, probably should and needs to and is doubling down on the already hardcore consumer, right? I mean, don't worry about drawing new people in. It's about getting your existing customers to spend more.
Well, speaking of drawing new people in, Miles, I heard Julie Hyman. She's out there getting ready to go shopping for a golf bag. Julie, if you wait long enough, Dick's Sporting Goods is investing $20 million into Golf Galaxy. You can go to Golf Galaxy, pick up a bag, shoes, balls, irons, and drivers.
I'm trying to think during this conversation what I could talk about for 5 minutes straight that you guys would be utterly uninterested in.
ESG.
I'm trying to. What is it?
ESG.
Yes, you guys are somewhat interested in ESG, even from a skeptical perspective. I don't know.
Green farming.
I'll think on it, and we'll do Julie's take on that maybe tomorrow.